Welcome back. You're with us here in the 230 Factor. There's a 113-point cut on the Nifty and about a 400-point cut on the Sensex right now. Yes Bank is the biggest gainer, and Hindalco and HCL Tech are the top losers. HCL is down about 4.5%. Anil Bagdani is joining us. He's Director Modern Shares and Stockbrokers. Anil, thanks for joining us. Sorry for the delay. Sanjiv Bhasin is joining us from our Delhi studios as well. Sanjiv, thanks very much. Appreciate it. Anil, first to you. It's again not a decisive day, but yeah, 1.5% meaningful cut today.
Yeah, I guess at least generally there's an expectation that every time on expiry we should go up because we should see short covering. And I guess since the month has been on a way up for the last 2 months, I guess people are expected to shorts to get continuously cut. You could probably blame a bit on Japan because I guess the SGX Nifty was suggesting a 20 or 40 point up move. All Hong Kong and Japan were trading positive this morning. But for whatever reason, I guess the market did correct, and we have to face it that we are down 120 points on the last day of expiry, which is a rarity. I still feel, the original target that I had was 7,800. So anything above 7,800, I think, was a stretch. But for me now, I think the market has to again break below 7,800 to decisively suggest that this last move above 7,800 was an extension or let's say a extra stretch on the markets. I spoke about it 2-3 days back. I said the channel that it broke out is at about 78.25 odd. It held that on Monday, and then you had that big move up. I think it was Tuesday where you had that big move up of 100 odd points intraday. So I think similar views. I think next week that level falls to about 78.10. So give or take, since the breakout was at around 7,800, if it were to break back below 7,800, then it would suggest that it was a false breakout, and probably that way overdue correction that we've all been talking about is probably on its way. So I'll still give it some time. I would still like to see a break below 7,800 to conclusively decide that the market has done for now with the up move that started at 68.25 and has almost touched 8,000 on the Nifty.
What is standing between the market and a correction? Sanjiv Bhasin. Sanjiv, before you pounce on me, I'm just joking. I'm just saying it completely in a lighter vein. What's your view? How are things looking to you?
Well, Prashant, we've had a very good rally from all the way from 7,000 to 8,000. And I think it's an opportune time. We think the adage sell in May and go away will hold true. And we think May could be a weak month with the Nifty, maybe falling 300, 400 points. We don't know. But we think 75, 76 should see strong support. However, it's going to be all about stock specific because a large part of the results on 70% of the market will be watched clearly, and if there is any weakness there, then there will be an opportune time for the broader market to correct. So like I said, this is all part of more of global cues and more of the the rupee, the bond, the currencies and all that, which is amalgamating now. So I think the first half of May and maybe stretched up till 20th, you could see consolidation stroke correction in the market. And like we said, we thought that 79, 8,000 would be the proverbial resistance where it was prudent to, hold cash. And that's what we've been suggesting to most, that don't get disbelieved into 8,000 preceding too much, but wait for a correction. And I think that correction or an opportune time for buying now will emerge in May, where you could see stocks fall more than the index.
Anil, by the way, the big move has been, people must have made a fortune, lost a fortune in the yen today, the dollar yen. It's a dramatic move. And so people are focusing on that. But if you look at the rupee yen cross, the INR JPY cross, that has also fallen back to about 1.63, levels of early 2014.
But I think the INR JPY, I actually happened to check it recently. I think that has been in a downward path for more than like 5, 6, 7, 8 years. It hasn't really come out of that, although I do believe at some point eventually that will emerge, because my feeling as it is for 17, 18 is Indian market goes higher and even Japanese market goes higher. Now for that to happen, both need to happen, as in the sense that the rupee has to strengthen and even the Japanese yen has to weaken. So I know it's too early days right now, but I do believe that maybe somewhere third or fourth quarter INR JPY will bottom out, and I'm more looking at 2.1, 2.2 over the next, let's say, 2 years on the INR JPY. So I think it will take time because that's been in a downward path for a long time. I had two levels to watch out for on the yen. One was 107. We bounced off 107, I think 3-4 weeks back. So maybe we are coming to retest it today or in this move. Can it stretch to about 103, 100? That will be ideal, I think. But even 107 is a good support for the yen, for the dollar, sorry, I should say. But if it were to even correct up to 104, 100 levels, no issues. My gut feeling is the range between 107 to 100 on the yen is an accumulation zone if you're a dollar bull, because my view is eventually the yen has to go to 140, 145, which should help the Japanese market go to 27,000, 30,000 over the next 2 years. So I'm not totally worried
Yeah.
I'm not totally worried about this move because remember the yen went from 75 to 125. So even if it comes back to 107 or 200, it's just doing a retracement. And to be fair enough, I think a lot of these correlations have lost their meaning because when NII
Exactly the point I was making, and we did talk about correlations last time you were on the show, Anil. I mean, the yen, if it continues it's this way, goes to 100, which means you have a dollar weaker, a weaker dollar, right?
that
Which
is
is good for emerging market stocks, etc. But then some would disagree and say, well, those and I think you were talking about episodes of dollar weakness and how they've worked, but not recently. The last episode has not been good for emerging markets. I mean, so, as you said, these correlations aren't exactly, you can't rely on them all the time now, right?
Yeah, but I think the euro and the yen work a little differently than the emerging market currencies. I think emerging market currencies seem to have a lot more to do with commodities rather than just what yen and euro are doing. Because if that was the case, then given the recent history, when the markets corrected in Jan-Feb, that also had a period where the yen was strengthening. But today, with the yen strengthening, you're not seeing commodities like crude is still holding 45. Some of the commodity currencies like the USD CAD is still up. Aussie did correct a little bit yesterday, but that was more because of the Aussie inflation data more than what's happening in commodities. So I think the emerging markets keep a more closer eye on commodities to give you a cue. But I think what's happening in the yen is pretty much a retracement of the move from 75 to 125. I'm not seeing it as a reversal of the dollar strength in the yen that you saw over the 2 years. I'm just looking at it as a pullback. And I think eventually that weakness in the yen will resume and that should eventually go up towards 140, but over a couple of years' time. So my call is still between 107 to 100. I'm okay going long USD JPY.
Sanjiv, any thoughts on this Jubilant Foodworks and whether this is an opportunity to buy?
Well, Prashant, you see the footfalls on the Dunkin' Donuts has left much to be desired, and I think that has, if you read or you understand, there is a sharp shift in the market. Even new players like Wendy's and a lot of the new ones, they are offering a sharp discount. So it's all about garnering margins and business. And I think Dunkin' Donuts has been actually the ugly duckling. So that is going to keep putting pressure on the stock. But we think closer to 900, it would be a very, very good lucrative buy. So right now, of course, it seems stretched, but it will come back to that 900 level where I think valuation will give much more comfort. So for us, it's an avoid. And we think that, you could be with the standard FMCG players like Lever or ITC in these times. United Spirits continues to be our top pick over there on the consumption side, and ignoring the rhetoric, we think there is immense value for a 1 year target of at least 40% above upside.
Yeah, no, fair enough. But why would you say it's rhetoric, Sanjiv? I mean, the prohibition is a reality in some states and more states are threatening it.
No, I don't think prohibition will be too far carried away. It's not the prohibition, it's more to do with the Malia case and, whatever on Diageo's holding and so on. I think that is what is put a dampener on the stock price. The prohibition and all are just temporary roadblocks. We think there is enough volume and size to, compensate that. And we think these are all rhetorics for the, near-term polls which are there. We think most of that will get digested by the year end. And, anyway, like we said, we think the longer term picture is extremely bullish. And if you want to play the consumption market, particularly on the beverage side, then this seems to be the best play.
Okay, fair enough. I mean, the stock is corrected a lot. Just one point. I think Dunkin' Donut burgers are absolutely yum. So you said it's it's the ugly duckling, right?
Yeah, but Pankaj, Prashant, it's been losing market share to Wendy's and the other players, and now, Wendy's...
Taste and making money have got nothing to do with each other. So
No, I agree fully with you.
Anil, Jubilant Foodworks, any thoughts? There's a big cut today.
Please don't talk about prohibition. People like me will suffer. But Jubilant, I think a similar case where the stock has rallied till the 200-day. I don't know what the news is that it's tanked so much, but it's rallied right up to the 200-day. So I think it's giving back some from there. About 1118 is the 50% retracement. So I think ideally up to at least 1120 should be on the cards in this move.
Sorry, you said 720.
1120 is the
1120. Okay.
50% replacement
720. Yeah. No, got that. 1120. The last low was about close to, I think, 900. I mean, 887 to be precise. So it bounced off that. We've seen big moves. I mean, but mostly the moves come on the back of the results for Jubilant. I mean, more than I can count, 10% down days on results day. But this is not one of them. But as I was saying, I mean, before and after results, there is promoters and insiders can't sell or buy stock. So how come promoters have sold stock? Maybe results are a little far out last quarter, so result season stretches for 45 days. But I don't know. I mean, we'll find that out. We'll take a quick break. Have to do that. Anil and Sanjiv, stay with us. The market has lost more ground, so 1.7% lower. There's a 135-point cut, 7844. We'll take a quick break. There's about 17 minutes to close. Welcome back. You're with us here on the 230 factor. 141-point cut now. I mean, so this is, it's okay. It's still manageable. I mean, of course, people have to manage it. It gets tough, but 140, not a small cut. But the point is, as Anil was saying, as Sanjiv was saying as well, and they're still with us, the market had rallied quite a bit. I mean, big time. And it was knocking at 8,000, kind of not... and 8,000 wasn't giving way. Anil, so I think you'd get to that 870, 810 that you were talking about pretty quickly, maybe even today, in the next 12, 13 minutes.
Let's hope not, at least. No, I think, it's interesting with all the excitement of the last month. If you take today's 140 points down, the Nifty series on series is actually only up 100 points. It's just that because we've had a good move in mid caps and small caps, so there's been participation across the board that it made the rally seem a lot more in this month. I think actually if you go and see net, the month of March was the bigger move as far as the index is concerned. Whereas for April, with today's move, it's only up about 100 odd points. So, and I think even if you look at the FII data, I was looking at it this morning, for the month of March, they were about net buyers of 23,300 odd crores. It seems in the month of April, it's more churning rather than fresh buying, because the net buying as of yesterday was about 3,300 odd crores. So when you compare 3,300 to 23,000, although 23,000 itself is huge and it's an abnormal month, you don't see that kind of buying. So it just tells you that this month is a lot more of churning, rotation, rather than just, everything moving or blowout move. So I think on a month-on-month basis, definitely March was much better. I don't want to say that April has seen some sort of distribution because we just hit a new high yesterday or this morning at 7992. So it's too early to call that. But in all honesty, if you ask somebody at 6,800, would you take 8,000 2 months later? And at that time, there was gloom and doom. People are talking about 6,500, 6,000. I think everybody with his eyes closed would have taken 8,000 2 months later. So I think there's nothing to feel bad about today's correction. We've had a phenomenal move, completely out of the box, completely out of any expectation in anybody's wildest dreams. So I think just take today's as a pinch of salt and say, okay, correction is way overdue, and it's better it corrects. Otherwise, if it stretches too much on the upside, then again it causes for a drastic fall on the downside. Just like I felt that the market got overdone at 6,800, which probably led to such a big up move because everybody got skewed on one side, that is on the short side. So it's better that we correct sooner so that you don't get everybody on the long side and then on the downside you see excessive pain. So I think today's correction is healthy and probably way overdue.
As I remember saying this earlier with you on the show, Anil, that period between 2010 to 2013, right? I mean, broad trading range. So at 7,000, market becomes a buy, and 8,000 market maybe becomes a bit of a sell. And sometimes those things work. I mean, you don't have more triggers, and the market just stays range, very, very ranged, and that's about it. But 78.39 right now on the Nifty, 500 points, not 500, yeah, almost 500 points on the Sensex, and the Nifty Bank is at 16,705. Okay, Vishal Malkan is with us as well. He's a trading coach. Vishal, good afternoon. Thanks for joining us. What's your view with the correction that we are seeing?
I would say that this would be termed as, we called as healthy correction, because it's been long since we see this kind of correction, and also there was an important psychological level which was there at 8,000 as well as 17,000 on Bank Nifty, and I think it's more of at the same time it was an expiry, so it is a combination of couple of things which has come today and which has led to this correction, and I think it is pretty good opportunity to get into stocks which were in high momentum.
I think people who might be losing money today, when they hear the term healthy correction, they ask the question, healthy for who? But, but that's the market. I mean, healthy for the market, let's clarify. I don't think that needed clarification, but just aside there. Vishal, so what's your sense? Will the fall continue? At what point do you get in? What would you do about it? Is there anything to do here?
I would look, yeah, of course there's many things to do actually, because the stocks, some of the stocks which has given breakout on recent monthly and weekly charts, and those are the ones to pick up the first in this kind of correction. And I would go with some of the banking names like an IndusInd Bank or a Yes Bank, which is still showing strength today also in spite of a good correction on Bank Nifty, as well as some other stocks like TVS Motor, Biocon, and Ashok Leyland, which are still trading at 52-week high, and those are other stocks which I would like to be long into.
But if the market is maybe it wants to correct a little bit more, right? Isn't going long even on strong stocks like a bit like swimming against the tide?
Yes.
I mean, why would you want to do it? Unless, of course, you're absolutely convinced that it'll make you a lot of money. These stocks are.
See,
I mean, if the market comes off, everything comes off a bit, right?
Yeah,
some more, some less.
This is yeah, but not everything actually, and not in that proportion maybe. There'll be always some outperformance on those stocks, and if I have to go long, then I would go with the strongest stocks, and if I had to go short, then I would go with the weakest stock. But I don't think that this should not be taken as a big fall or a big correction. It's just the first black day or a down day which we had since a long time now. and we need some follow through. It's one day of correction cannot be termed as a correction. We need some follow through. We need some further signal on momentum indicators to call it a big correction, and which is not yet. We have to see for next couple of trading sessions. So still I would not lose hope on this from the long side, and I'll stick to my strong stocks.
Fair enough. So you said Biocon, TVS, and which was the third one?
Biocon, TVS Motor, and Ashok Leyland would be my best picks. And also in banking, I would bet on Axis Bank, Yes Bank and IndusInd Bank.
Anil, if you're trading, would you want to? I mean, looking at the market today, if you're trading, right? I mean, if you're buying stocks, you want to buy Jubilant 10% down because you think things will turn out okay, or United Spirits, as Sanjiv was saying, that's a different matter. But if you're trading with a day like today, would you want to go long anything, or you just, even if you're not selling, you just sit out? I mean, what would you do?
Yes, I would. I would not go long today.
Anil.
At least I would wait for. Yeah.
Okay, sorry. Do complete that. Vishal, just complete that. You're saying so you wouldn't go long today. So that's it. That's a clarification. You're saying you like these stocks, but you wouldn't go long these stocks today.
Because yeah. Not today, because as I said, today is the first proper down day on the market, on Nifty and Sensex after a long time. So if there is a follow through tomorrow, then I would avoid or maybe wait for a longer time. But if tomorrow again, if it shows signs of momentum, then these are the best stocks to pick up. So then I will go long tomorrow, not today.
Anil, any thoughts?
I think if you're doing a long short portfolio where you're trying to beat the index, then what the gentleman said is very interesting, because then obviously you'd go long the stronger ones, and you can't argue that in a market which is nowhere close to 9119 or the bank nifty nowhere close to its all-time high, a Yes Bank and an IndusInd Bank are at new all-time highs, so, or new 52-week. I think they're both new all-time. I know IndusInd Bank is, I'm not sure about Yes, but they may be at new 52-week highs or life highs. So definitely if you're doing a long short portfolio and you're trying to beat the index, these two stocks would definitely be on your long side. I think Biocon is a different one. It's a stock that has been consolidating for many quarters, really didn't participate much in the 2014-15 rally, now setting up or has already set up for a nice breakout. So that also. Ashok Leyland, I think for now, I would buy the dip rather than here, because I think I expected it to take out its previous high of 99 in this current move, and it's done that. It's gone to 110 or 112. So now I think the pullback more so than today, but I can see why the gentleman would pick the other three stocks, that is Biocon, Yes Bank and IndusInd Bank. Purely if I was doing it, it would be in a long short portfolio.
A long shot, kind of. Okay, fair enough. I mean, as somebody long back aptly said to me, and I think it wouldn't be a new quote. I mean, the market is like a cricket match with unlimited overs. So the mistake most people do, and trading and investing, I mean, it applies to both, is to do too much, too often. I mean, all you have to do is just wait and not swing at every ball, but patiently wait for the right one. And that makes you money. I mean, doing too much, too often, impulsively, that more often than not loses you money. So I think it's very basic advice, which many in the market ignore. 78.50 is where the Nifty is, 130 odd points lower. The Sensex is down 460, 465. That's about 1.7% lower. So I think there's a bit of a recovery, a small bounce, but just that, a very small bounce, nothing beyond that. Sanjiv, any stocks you want to talk about? You did say United Spirits. Anything else?
Yeah, so we can give you three good names. NBCC has been my old favorite. I continue to be very bullish there and use any declines to buy. The other is Godrej Properties, a similar play on the private side where I think execution and pedigree of the management is par excellence, and we think the order book is very strong. And the third one is a new company called, a new stock we've had, Suprajit Engineering. It has almost a 65% play on the cable side, largest OEM player on both the two-wheeler and four-wheeler, and the recent merger of Phoenix Lamp will re-rate this stock. So we are very bullish on these three stocks, and we have advocated most of our clients to be buying these on any dips, all these three.
So that is Suprajit. There was United Spirits earlier.
Yeah,
Right.
NBCC, Godrej and Suprajit.
NBCC Godrej Properties, right?
Yeah, Godrej Property.
All right, fair enough. Fair enough. I think we're just about wrapping up. There's about a minute and 15 seconds to go as far as closing is concerned. Anil, if I were to ask you, if you were to place odds, this would become a big trending market in this episode itself, or I mean, it would confuse people, rebound, do nothing, and then eventually go down. Or you think, well, this is it. It'll follow through tomorrow and beyond tomorrow.
Oh boy, that's a tough one. I'd like to believe it'll be a little bit more of a yo-yo kind of thing, more of a trap and then a fall. But you know, let's be honest. I think for a long time, the world markets, especially the S&P, has been testing the last bear out. If that starts to give up now, because that's been at 2100 now, I think umpteen number of times, even though it fell to 1867, bounced back to 2100, it fell to 1810, then again 2100. Is this now the third time where it's again going to crack down? Anybody's guess. But I think if that starts to give up, I'm a firm believer nowadays global markets are all linked. I mean, you saw what happened today when the Indian, SGX suggested let's say a 30-40 point opening on the Nifty. The Japan market was up 260, Hong Kong was up 300, and one news which on the Bank of Japan doing nothing created this kind of a fall. It just tells you that everything is pretty much linked. So I think global markets will play a cue. I don't want to sit on the sideline, but I do believe that the markets are stretched. So if they were to correct also directly, I won't be equally surprised. I think the correction is way overdue.
All right, fair enough. Anil, thank you very much for joining us. It's been a pleasure chatting as always, and thanks for coming on short notice. Sanjiv, thanks very much for dropping by. Great speaking with you as always. Vishal, thank you for your time as well here on this edition of the 230 Factor. Thanks indeed, gentlemen. Let's wrap up things. I think the stocks are all, large cap stocks are all coming up on your screen one by one. Yes Bank, top of the list. Gainers, I mean, you'd struggle to find more meaningful gainers beyond Yes Bank. If you look at the losers, there is, I mean, a whole lot. HCL Tech and Hindalco, some of the biggest losers. I mean, you could ignore Hindalco there because that keeps going up 4-5%, coming down 4-5. Not a big deal, but HCL Tech down 4.5%. It's a meaningful cut. HDFC Limited came down about 3%. That's about 1,086 on HDFC. Mahindra and Mahindra was down 3%, 1345. ITC was down nearly 3%. ITC heavyweight Nifty 8% weight on the Nifty. Maruti was down about 3%. That's 3749. So that did come off quite a bit, with of course the yen going up. As I was saying, the dollar yen is one, but the other thing is what's happening to the rupee yen cross as well. That's at the lowest level since early 2014. Maruti's imports comprise of stuff which is 20% yen denominated. So it does get hit if the yen appreciates. And that's essentially what is happening against the rupee as well, as the yen goes up against the dollar there. Maruti came off 37.49. It of course did see a big move recently after results. I mean, after the results, the stock was up some 4%. This is day before yesterday on Tuesday. Yesterday was flat. Today it sold off. You've got GAIL, which was down 3%. Tata Power was down about 2.6. NTPC down 2.5. Bajaj Auto and Tata Steel were down 2.5% each as well. So that's the Nifty tally. 9 stocks higher and 41 stocks. I mean, actually 42 because there are 51 stocks now, including the Tata Motors DVR. 9 and 42. 9 up, 42 down. So that's basically what happened. ACC, I mean, I didn't mention ACC earlier. So Yes Bank, of course, 3.6, top gainer by far. ACC was up 1.5. They reported numbers. The stock did take some time, but eventually it did come up by close. So that is quite okay. If I just want to wrap up the losers other than the large caps, so Jubilant Foodworks, one of the biggest losers there, big 10% cut, yet to report numbers, news that promoters have sold stake, some 3.5% of equity has changed hands. No confirmation yet from parties involved, but buzz then talked on the street that promoters in Jubilant Foodworks have sold stake. You got Gateway District Parks which sold off, Sadbhav Engineering which sold off, Godfrey Phillips sold off, Coromandel, Shriram Transport. I mean, they all came off a fair bit in trade today. So that's the pack that we are talking about. Why don't we take another quick break here? Let's do that. We are back in 2.